And there you have it, the closing bell from the New York Stock Exchange on what was a turbulent day for the global economy. At one point, the Dow dropped down over 600 points, but it did manage to rally back up, closing up over 100 points.
It was also a bit of a roller coaster for the S&P 500 and NASDAQ today, but in the end, both closed with slight gains. For more, I'd like to bring in global economics and investment expert David Waddell. He's the chief investment strategist at Waddell Associates. Thank you for joining us. First, global economies still emerging from the pandemic right now. Now we're seeing Russia invade Ukraine. How will this geopolitical drama affect the global economy in the coming days and weeks?
That's a great question. Thanks for having me, by the way. I think it's important to understand that Russia is only 2% of the global economy by total GDP. It's smaller than Italy. It's smaller than France. It's smaller than South Korea. They don't make a lot of stuff. We get our vodka now from Texas. But they do export about, or they supply Europe with about 25% of the oil that Europe consumes and 35% of the natural gas, a bunch of wheat, and some precious metals that are used in industrial kind of functions. So I think what happened today was that, the impact of the global economy will be the size of the sanctions that Europe's willing to deploy. But they're not blowing up pipelines. They're not blowing up their gas tanks and their oil tanks. The sanctions will end up being what damages the global economy. So if the size of the sanctions are small, then the damage to the global economy will be small. So I think Putin's kind of smart, knowing that attacking right now would be an inflationary event if they deploy a lot of sanctions at a time when policymakers globally are trying to battle inflation. So I don't know what the resolve of the allies is going to be relative to the degree of sanctions, but the markets today basically decided that given the fact that that would be self-inflicting wounds on themselves, their resolve probably isn't that great, which means Putin basically gets away with it.
So you're kind of describing a game of chicken, like who's going to give up first? Is the pain that the U.S. and the allies are going to feel, so much that they're going to drop the sanctions, or is the pain that Russia is going to feel so much that he will revert course first? Is that correct?
Yeah, but Russia has stockpiled resources. So they've got $600 billion or so sitting in their treasury. And with oil prices above $45, it ends up being positive for their treasury. And so Russia has been planning this for a while, obviously had the strategic advantage. It really comes back to Germany gets 50% of their energy from Russia. So if Germany says, we don't want your energy, they're going to have a pretty chilly February. So again, it comes back to the resolve. And I'm just not sure. When the president spoke today, he didn't say anything about turning off, the Russian fuel supplies. He didn't talk about turning off access to the SWIFT system for the banking system. So there'll be some pain, and there'll be some individuals who are targeted. But big targets on Russia will just ricochet back and hurt those who fire.
But, you talk about things not being made in Russia, too many things. I caught that little plug for Tito's there. But, there is, of course, energy. There's agriculture. There is a lot of stuff that comes out of Russia. Ukraine has been called the, breadbasket of Europe. So, David, will these sanctions that are largely meant to cut Russia off from Western markets affect global energy and agricultural supplies?
Well, so energy prices closed today under 100. I think they actually were just a bit higher on the day. We've moved pretty dramatically, but I think that's all basically priced in. This was signaled. This isn't like 1990, which, by the way, I think is the best analog for today, when, surprise, Iraq invaded Kuwait, and suddenly oil prices doubled, markets went down 20%. We ended up actively getting involved in the combat. There are a lot of interesting parallels to where we are today, save that part. So I think all of that has already somewhat been baked into the pricing. And then when the president today didn't put more draconian sort of language around, Russian exports of oil prices ended up coming down off their highs. So I think a lot of this has been priced in. This is not a surprise.
You look at the stock market this morning, and American investors thought they were taking a bath at breakfast and lunch. Come dinner time, it seems to have recovered. So what do people with investments need to be aware of in the coming days and weeks, especially since obviously there's going to be a reaction to what's happening overseas.
Okay. When I get into moments of time at an investor when I don't really know what the outcomes are going to be, so I don't really know if NATO is going to fight with Russia, I don't really know whether there's going to be some cyber attack, I go back to two things. One, sentiment, and two, a historical analog. As I said, the right historical analog, I think, is 1990. Here's the interesting thing. Over 35 years worth of sentiment data, right now we are 2%, in the 2% most pessimistic we've ever been, right? And so there are 29 occurrences out of 1,800 weeks where the investor public has been more pessimistic than it is today. If you look at the median returns 1 year forward from those overblown sentiment, declines, they're 22% higher. So I don't know what the market's going to do tomorrow. I don't know what it's going to do a week from now. But a year from now, based upon how negative the sentiment really is, it could be substantially higher. So in 1990, the markets went down 20%. A year later, once they bottomed, they were up 40%. And in 91, they were up 31%. So these conflicts get resolved. My guess is the bite from the sanctions isn't going to be as big as people think. And I think, the markets rally because the economy's growing, earnings are growing. We don't use as much oil as we used to, frankly, as a percentage of GDP. So I think we can kind of move through this. And I think the market came to its senses today once it started doing the work on sentiment, historical analogs, and Biden didn't, come out with more dramatic sanctions. So anyway, I bought some stuff today.
Well, thank you very much for your perspective. It makes things very interesting if you're into the stock market. David Waddell, thank you very much for your time.
Thanks, David.
Great to be with you. Thanks, guys.